Welcome, welcome, welcome. We have a lot that happens with respect to the stock market and the economy. And I wanted to just take a couple minutes because what has happened over the last couple of days has been pretty historic. Now, here's the deal. When we talk about the economy, when we talk about what's been happening, think of it and kind of liking of what you do with having Mentos in one hand and a Coke in the other. Now, if you were a little kid, what you'd usually do is say, all right, I'm going to take some of the Mentos, pop them into the Coke, and you're going to watch it explode. And that's what I would consider to be a very volatile reaction that happens with the Coke because of that. Well, that's exactly what's been happening over the last, call it 12 years. So ever since the financial crisis, the Federal Reserve has been trying to stimulate the economy by paying for bonds, by doing a lot of different things with the Federal Reserve. So what that would say is that trying to put a small amount of Mentos into that pop bottle every day. Well, it wasn't enough to cause a massive reaction. So what was happening is that we just kept putting a little bit in, a little bit in, a little bit in, and no real volatile reaction would occur. Small little bits, but nothing major. So when we put in a lot of Mentos coming into 2020, 2021, we put in a whole bunch of them. And this is in the form of money that we put into the economy. Well, that caused an explosion to occur. Now, that explosion was in prices. So the prices of everything, whether it was housing, whether it was cars, whether it was anything related to commodities. So the food that we eat, the gasoline that goes into not only our cars, but the other things that we need for oil related products, like even plastics. So all of those commodities exploded and became very volatile. And so all of a sudden, the Federal Reserve starts standing back and saying, holy cow, what's going on here? We need to start taking out some of those Mentos. We need to start taking out some of that money that we put into the system to try to control this explosion that is happening. And so that is literally what the Federal Reserve is starting to do now. Every rate hike that we have, every way that we are trying to work with taking money out of the system by stopping the purchasing of bonds, well, that is really saying, I'm just taking those Mentos out. And right now it's at a slow pace, but that is going to continue. And that pace is going to pick up more and more. So we expect the raising of interest rates to happen more over the course of this year. We expect bond prices to possibly even go down a little bit more as we're pulling the money away from bonds. That's happening right now. So with that, why is that important, and what has happened in the last couple of days to make the stock market so, well, call it interesting to look at? And interesting is a very subjective term, I understand, because holy cow, this has been an epic kind of collapse of a lot of things that have happened. And it really started a week ago, last Wednesday, when we had the Federal Reserve raise interest rates. Well, the stock market, if you remember back to that day, went up about 3% or so. And that was a lot of big institutions that had some very short-term plays on the market. So even though the Federal Reserve was starting to take the Mentos out, the rest of the financial industry was saying, all right, we should be putting some here. We should be doing this. We should try to figure out this type of explosion that's happening, how we can kind of capture some of the explosion. Well, that turned around as of last Thursday, and the markets started to go down a little bit. Well, they're starting to go down in some of the correct places that some of these large institutions were thinking about, but they were also going down in some incorrect places that the large institutions were not thinking about. And then when we couple that with the bonds starting to go down in price, a lot really started to happen to say that it's a perfect storm of a lot of these large companies, large financial companies starting to say, let's pull money out of the system. And the people that were kind of employed to run this money, they're getting fired. And when they get fired is when all of a sudden, indiscriminately, we start selling off everything. So everything that that person had been purchasing or selling is just all completely gone. And so that takes a few days to unwind. So we had Thursday happen, Friday, that was continuing on. Monday, yesterday, that was continuing on. And now we come to kind of the wrapping up of some of this stuff. But here's the thing, we've had this massive amount of selling that's occurred. So no one's really interested in just completely getting back into the stock market handedly because they're all scared now. So this has to be a process. And you're going to start seeing a lot more volatility around this just in general, because as the Federal Reserve is trying to take those money systems, the Mentos, out of our financial system, that alone is going to cause a lot of hardships with money. So just know that there's a lot of times right now that is going to be more of a period that you possibly want to be in a more risk, what you call risk off type of an approach with your wealth, and more into something that is going to be just sustaining you through this period of time. With that, I hope you enjoyed this. Take care and have a great day.